and welcome to the Trading Zone. I am Joe Teague of Equity Armor Investments. It is great to be here. Hope you're off to a great start to the trading week. Hope you had a great weekend. Brian Stutland is usually with me. I don't know what's going on. Maybe it's because the Bears fell out of first place and down to seventh place. He can't make it, but I'm shocked he missed last week too, because he had a chance to gloat for a second with the Bears up on top, but it didn't last very long. Sorry, Bears fans. I'd love to get into the markets here. We'd love to talk about everything that's going on. There's a lot going on here. Let's take a look here, just at the heat map. There's a bit of a rotation. You can see maybe some unwinding of the NVIDIA Google trade happening last week, but it is still kind of pause mode, waiting for the Fed later on this week, and then we're maybe going to get some activity. But the show today, I'd like to do something just a little bit different. I'd love to talk about MicroStrategy and Bitcoin. Of course, Bitcoin just really has been all over the place, up and down and all around. People have been talking about the infinite money glitch trade that is out there in Bitcoin, and it came out of MicroStrategy. Maybe you're familiar with it, but it just seemed too easy to be true. They could essentially print money and buy more Bitcoin, driving the price up, printing more money, which drive their shares up, which allowed them to print more money. And that seems like it's starting to come to an unwinding and an unraveling, and it's really coming close to unraveling right around this decision by the MSTR to say that this is no longer considered a indexable stock. It cannot be something that can go into indexes, which it is in the Russell 2000, 3000, and also, most importantly, the NASDAQ 100, as well as the MSCI World Index. So it is going to be forced selling once this goes through, and that will be happening in January. And I've seen this story before, where we all know an event is coming. Yeah, there's an initial downward pressure on the stock when you have this big negative event that's going out there, but it just continues out there. And as a market maker, which I used to be one, when I knew a big order would be coming through, I don't give them the best price I possibly can. I know this order is going to be coming through. I know there will be forced liquidations on this date. So what is very likely to happen is that the price will have a lot of pressure until this date. And then the worst price will be the forced liquidations, which happen on the date. And then, of course, it will be unwound and people will be buying the dip only after that happens. So I think we should be prepared for that. Bitcoin hodlers, Bitcoin traders, just kind of prepare for this, because this is just out there. Everyone knows this is going to happen. We have to just be ready for it and line it up. And this, of course, has major implications on the rest of the market. As we know, of course, the stock market very busy, very tightly correlated with Bitcoin, especially risk assets, especially the AI trade, tech trade, very correlated with Bitcoin because of the leverage story. So that's very simply a very high water story. If you want to get more in depth into MicroStrategy, I'd love to consider that. Some people say it's a Ponzi scheme. MicroStrategy, of course, the way that the infinite money glitch operates is they issue debt, and then they take that debt and they buy Bitcoin. And now for that debt, they have to pay a high interest rate, a high dividend payment on their preferred shares. And then, of course, that is typically about 10% right now is what they are paying on their preferred shares. And that requires them to appreciate by that amount in order to continue that trade. So they have to pay that dividend payment off, and then they have to sell. In order to pay that dividend payment off, they have to sell more shares. This works very well when Bitcoin is going higher. Of course, you can maybe see this a little bit closely here. When Bitcoin's going up, this trade works very well. It's very easy to pay off a 10% dividend payment when Bitcoin's having a 20%, 30%, 100% year, which it's had plenty of lately. But when Bitcoin has a flat year, like we're seeing now, that kind of sets the trade in haywire. Right now, they have been able to raise some cash. They have been able to sell some preferred shares, but they did not buy any new Bitcoin with those sales. So yes, they can pay off dividend payments. They're not necessarily at risk to not paying their dividend payments for the next year and a half. But if Bitcoin doesn't go higher, they are in a world of trouble. Now, the other thing is people have been willing to pay over fair value on this name, but this was kind of like the first start, and there have been many copycat funds out there that said, hey, this is working for MicroStrategy. Maybe I can do a levered Bitcoin fund. Maybe I can do a similar strategy and have similar rewards. So there have been many other copycats, and most of them have not fared as well as Bitcoin. A lot of these levered Bitcoin ETFs, of course, have not done as well, which has just added to the problems, caused some forced liquidations in some of them in order to raise some capital to be able to pay off their preferred shares or pay off their interest on their loans, which allowed them to do the whole trade to begin with. So essentially, the required variable for this to work in the long term is the price of Bitcoin to go higher over time. Essentially, you're going to be selling preferred shares to pay back previous investors. Essentially, when you have to borrow money to pay your current investors or either get new investors to pay off your current investors, a lot of the times people will call that a Ponzi scheme, and for better or worse, that's what we're looking at here. Just describing it as it is. Whether or not Bitcoin is able to appreciate more than 10% next year, I'm not going to say that is going to happen. I can say that the earnings per Bitcoin or the value per Bitcoin is not changed, whether it goes to 200,000 or to 50,000. If it has a 50% drop or 100% return next year, the value of them will not necessarily change. There will still be one Bitcoin, and they'll produce exactly nothing, which is kind of the problem here. It's kind of a bet that the economic system is failing, which is a very attractive bet. A lot of people who have liked gold over the long term have liked that bet. But at some point, once you get past all these hurdles, like we have a very pro Bitcoin president, a very pro Bitcoin SEC chairman, it's ETFs all over the world. It's in portfolios. This is just part of normal investment. It just comes to a point of like, okay, what are you doing for me lately? And at some point, you're just left with the true believers that are just out there saying, hey, this is the future. When in reality, there's so many other coins that can do the exact same thing that Bitcoin can do. For a lot of the smart contracts, some of the other coins out there are better than Bitcoin. And some for the secured payments, a lot of the tethered coins have a lot of advantages over Bitcoin. So it's just a question for me. Hit me up. Let me know what you disagree with. I'd be happy to discuss it. But for me, this is just kind of a sign of like the excesses in it, and it just ultimately this is just a massive red flag for me. But bottom line is, it should be a buying opportunity once this is over with. Once that MicroStrategy is removed from these indexes, which, by the way, there should be pressure on these index on Bitcoin and the market in general until this removal happens. So just something I'm watching very closely, and kind of piggybacking off of that trade is I'm expecting some volatility in January. I'm expecting to see, either this is going to cause some contagion and pullback in the major indexes, or not, and we'll rally higher. And my trade of the week is surrounding that exactly. I'm looking at maybe some downward pressure here. I'm looking at getting some protection for the portfolio here, and also looking for a buying opportunity after Jan expiration. So expect some weakness through Jan expiration, mostly because of Bitcoin, mostly because of the pain that MicroStrategy is just putting on the market. And, the bottom line is a pullback is actually healthy here for stocks. Pullback is healthy when you have these higher valuations. And just some consolidation here would be quite welcome. Currently, the QQQ is about 625, 626, give or take. So this will be, just a few percent, like 3% lower here if we went down to 610. If it goes further, that's actually just fine. Be happy to just close out this 620 put, hopefully get a nice premium there if we do trade lower here on expiration. Then you can just hang on to this Feb put. I'll see what happens there, but I'll keep you posted. For the Trading Zone subscribers, I'll keep you posted on what my decision is as it comes. But my expectation is for a volatile start to the year, and then we'll see what happens there. Obviously, this is not going to help. This MicroStrategy situation is not going to help the risk appetite. Very likely will lead to some volatility in the market. So we'll see how that plays out. My expectation, of course, though, is that there will be a pullback. If there will be a bounce, if there is a pullback, I'm looking forward to adding to the portfolio if that does happen. And that is the show for the week. Very simple show, very easy. Hope you all got something from it. If you have a disagreement with me about MicroStrategy or Bitcoin, let me know. Happy to hear it. Otherwise, I hope you have a great week and good luck with the Fed. Good luck with the jobs numbers. And yeah, it's going to be fun to see. I'm Joe Teagate. Have a great week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.